Did you see this article? Panic sellers during stock market dips are often married men with children. It's research out of MIT, which I found particularly fascinating because it suggests that those who are looking for the most stability were actually panic selling, and it was having the exact opposite effect of what they were intending to have when it came to the markets. They also found that women tended not to look at their portfolios as frequently and tended therefore to sit through those short-term volatile moves. Now you might say, well, it's obvious why men are more likely to panic, because they may well be the main breadwinner. They're the ones who are more financially literate, the data suggests, and therefore the ones who are more responsible or feel the responsibility of the family finances as married with children men, more so than perhaps the women do. Again, based on the data of the conventional family. So that presents a problem, that we want one outcome, but we're getting the exact opposite outcome. We want stability, we want good selection. So what do the authors suggest of the research report? They suggest that men might be better off avoiding those biases by, first of all, having a process whereby the kinds of stocks they have are the type that they're going to hold and are worth holding for a longer period of time. In my opinion, should be at least once, so they don't feel the need to trade them, and they should be more focused on what the strategy will have them were the stocks to fall, rather than assuming that they'll only rise. So in planning for the downside, they may well avoid some of the more volatile stocks, which are the ones which would lead to greater panic. In my own investing, being a married man, a child, my role is to pick resilient stocks, what I call them, the ones which are less likely to fall because of strong cash flow, revenue growth, strong valuations, in other words, share price to profitability, and a consistently good performance. So that were the market, I don't even get to the stage of panicking. There is not that issue of, oh my God, I'm panicked because of the nature of the stock. And also if the market rises, well, everybody's a genius anyway.